chart?
Yes.
Okay. All right, so this is the, today what we're going to talk about a little bit is how to trade the grains around the pit open. As you can see here, the pit opens at 7:30 Pacific. And one of the things you want to do that's important on when you're trading the grain futures is avoid the shotgun right at the pit open. Here's the open over here. In fact, let me extend this box out a little bit more so you can see. See the shotgunning of bars you get right at 7:30? All these bars printed right at the pit open, right in here, the first few minutes. So if you're going to trade ZC or ZW, ZW also a nice little mover, keep an eye on that. If you're just trading these for the first time, I would suggest doing it in sim and just simply put the, tuck it in the corner and keep an eye on it, and then sort of work your way into it. But the trades we were talking about earlier, you can trade both sides of this, and you want to go pivot to pivot, and you want to have very short expectations as far as movement goes. You can see here that shortly after the open and the shotgunning, we like to wait about at least 10-15 minutes for a direction to kind of work itself out. And here you see we came up to a swing here. This was a clear resistance level. Pulled back to a higher low. See, we're starting to head up a little bit here. And we pop up through resistance here. So your trade entry was when it came through 41.50 to the long side. I know some folks were asking about it in the room, where would I have taken a breakout long? Well, it would have been right here. And then right when it was chopping around this pivot at 44.50, remember we were saying, okay, you're going to want to get out up here. Get out of your longs up here. It's chopping around 44.50. Remember that number? That's because, see, it was spent a lot of time kind of oscillating around this pivot. Now, corn is 4 ticks per point, and each point is $50. So it's $12.50 a tick. And you can see here that from this breakout level at 41.50 to 44.50, 45, this was about 14 ticks. Now that seems to be the sweet spot. I've been looking at this for a while now, and I can tell you that when these trades get up 12, 14, 15 ticks on ZC in particular, you're going to want to take that money off the table. It's not prone to long runs like you see on the equities and some of the other markets. Very rare you would ever see a long run for ZC, just to put it in perspective, would be like 29, 30 ticks. That would be an enormous run, and very rare. If you go back and study this, you're going to see most of these runs pop about 10, 12, 14, 15 ticks. Once you get up around that area and you're hovering around a pivot like here, you're going to want to tighten your stop or just simply flatten the position and look for another entry. Now the short that Gary was talking about was when it rolled over up here. I don't have it on here. The longer range dots were indicating to trade the short side. And you could have shorted this because, see, it rolled over, and these grains do this a lot right after the pit open, first hour basically. It rolled over and broke this 44 support level, giving you, if you hadn't traded the long side and been stopped out, you could have shorted that right in here, that break. And of course your target would have been right back down here at this support level. It would just hit. This is live data. See, look, it came right down here and hit it. In fact, it's continuing to break down. It's kind of hovering around this 0.8 pivot at 40 3/4. So that's how you could have traded both sides. 14 ticks up, boom, 14, 15 ticks right back down. 2 trades. You don't need to take a lot of trades on ZC. This movement that you see here is fairly typical. And what's nice is you got huge liquidity. I mean, you're talking about, here, let me open this up. Look at the bid ask on this. Well, this is the account right here. Look at this liquidity. It's huge. I mean, it's like 100 bid, 150 offer. It's not unusual to see 200 contracts aside. So it's good liquidity. You can pop in here with 5 or 10 contracts pretty easily. In and out. It'll fill you no problem. Put a volume bar up. You'll see some of the volume on these range bars. Wouldn't be unusual to see 200, 300, 400 contracts trade in the span of a range bar. Yeah, there you go. See that liquidity? It's tight spreads too. 1 tick. So you don't have to worry about getting filled if you want to pop in there with, 5 or 10 contracts. But you got to take it and you got to sort of watch it for a while. It's something you got to get the feel of. It's not something that you just sort of go in and start, sowing your oats in there. You got to really watch it and trade it for a little while. I strongly urge you to do it in sim until you get a feel for it, because it is different than the equities and the currency futures. No question about it. All right, so that covers trading the grains around the pit open, looking particularly at corn. ZW is another one. I don't have the chart up here. It's on another screen, but that's another one to watch. ZW, that's the wheat futures. Both of those are the May contract right now. May contract. Hans asking, what would be the strategy on ZC? I'm done. Hans, I'm done. That's all. I don't look for more than 1 or 2 trades right around the pit open. Pop the long, pop the short, boom. That's it. You're done. In and out. I'm not going to trade it anymore. Yeah, it's not something you want to go in and keep chasing around all morning. Most of the volatility happens like in the first hour, and you're coming up 8:30. Well, it's almost the first hour is done, and that's typically what you're going to get. You're going to get these little pops in and out. ZW Donald, he's asking about the pit tick value. I want to say it's $10 a tick. Stand by. I can answer that. Stop the recorder. Hold on.